we seeing in the infrastructure sector at the moment? Well, with this volatility caused by bond rates going up, value has certainly emerged back into the sector. So what you'll see in a moment, if you just flick to there's a little table I like to sort of put together just to sort of summarise my thoughts on the sector. What you'll see there is you got the percentage off the 12-month highs. A lot of these stocks have been whacked down quite a lot. Next column is my 12-month TSR outlook. So that's obviously the distribution yield and the capital growth potential. Within this sector, obviously the distributions are pretty predictable, so sort of high level of confidence on those yields. And the target price, well, what I try to do there is to assume a normalisation of the interest rate environment upwards. So I think there's a degree of conservatism built into my targets. You'll see that column there with the ratings. Not that long ago, I only had a couple of ad ratings on my stocks. More and more, I'm seeing value in putting those up to ads. You'll see in that table there our target and comparing that to also the consensus forecast. So you can have a look at my target and see whether you think I'm wildly wrong or not. The percentage upside to the target, the 3-year sort of growth outlook on the distribution, you can see some stocks there are higher yielders and lower growers and vice versa. And the final column there, the estimated cash yield. So as I go into sort of reporting season, I mean, it's pretty much the same story I think I tell every reporting season, with the predictability and the cash flows of these businesses, with the data releases, with the guidance statements that to come out. It is usually a fairly sort of low risk result. The ones that I suppose are most interest to me, look, distribution guidance sort of revisions are the things I'm looking for. In particular, those with a calendar year and sort of financial year are the ones I'm looking out for. So Sydney Airport will provide first time distribution guidance for 2018. Spark Infrastructure has provided a growth guidance into 2018, but just looking for that to be reaffirmed. And then some of the other ones which will be interesting, Horizon have just had their outlook absolutely belted by the draft decision by the regulator, looking for comments there on that. Also, they've been contemplating an acquisition of Wicket, the Wiggins Island coal terminal, so I'll be looking for any comments on that front. Cube, very vague guidance. They just say, hey, we're going to grow. So I'd be interested to see what their plans are on that front. What I have noticed is the volumes going through our container terminals in the major metro ports have certainly picked up a lot more. So they've been sort of growing at sort of that 0 to 2%. And on my last count, they picked up into the sort of 6 to 7% growth rates in the last half. So things are really starting to move on that front. That could flow through into the Patrick business and into also the logistics. So the potential sort of upside surprise on that front. MQA is the other one I'll also be looking out for. We've already got the data on the traffic and toll numbers coming through, but really the thing overhanging the stock at the moment is the internalisation process. Macquarie exited the register, so there's an increased risk that a bigger fee will be paid out to Macquarie. So certainly be looking for any comments on that front. I suspect probably they won't provide much at all. They've said they'll come back to the market by the time of the AGM in late April, early May, but just hopefully something can actually be said. So if you look at what I've got there, ad ratings on a lot of the stocks there now. The two that may stand out to you as having holds on them with solid returns at Cleanaway and Cube. Both of those, I really am just looking for increased confidence coming out of the result. If everything's looking as I was expected result, more than likely going to upgrade those two. So they're the main things in my sector. Probably preferences if I go through these stocks. I mean, a lot of them are looking like pretty healthy returns at the moment. But with energy infrastructure, Spark Infrastructure, highest yielder in the sector by far. Distribution guidance already given into 2018. Within transport infrastructure, least complex is Sydney Airport. But once we get through this internalisation process, if it comes out the way that I'm expecting, then there's plenty of upside on that one that would sort of come to the front of the pack. And then within that sort of other grouping, I think Cleanaway, certainly with that high quality CEO steering the ship, certainly positive on that. Although I must admit I am quite sort of benign on that Tox acquisition. So it sort of does take a little bit of the kick out of that one.